Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's February 28th. Hey, we're almost to March here. So let's kind of start with it here. We got a few economic news to go over today. We'll start off with the second revision of the GDP, also known as the Gross Domestic Product. The first revision, or first initial one, came out in January at 2.6%. Forecast for the second revision is 2.5%, and then it did came in rated expectations at 2.5%. Now the final revision will come out next month for the fourth quarter. Obviously, I can't imagine it being too far off from this, but obviously it's a big one from third quarter when third quarter is up over 3%. So, but this is kind of showing us that the economy is growing at a pretty good rate, but not overheating as maybe the Fed was kind of concerned about. But things are picking up in January compared to what we saw in December. So again, the first quarter will probably be a little more important when we'll start seeing here in the next couple of months revisions of the, when we start seeing reports for the first quarter here. Now, for manufacturing in the Chicago region, we got the Chicago PMI for the month of February. So in January, we had a 65.7 on the index, and it dipped a little bit down to 61.9. And last but not least, we got the pending home sales for the month of January. So December, there was really no change, but in January, it dipped from December to January down to dipped 4.7%. Again, this is still an issue with the inventory levels, but even more so, a new item came up is basically the weather in the Northeast. The Northeast numbers were down quite a bit, and it had to do a lot with the weather they had. It's quite cold there as well as a lot of snow. So basically, people aren't too incentivized to go out into that type of weather. Here in California, we're pretty fortunate, so we don't have to deal with that. But I have lived in that weather before, and no, it's not too pleasant. Last thing you want to do is be going outside if you don't have to. Let's kind of jump ahead here to the headline news. Excuse me. So basically, the only thing that's really here is the stock market is currently up, kind of rebounding yesterday after the Fed Chair Powell gave his testimony in front of Congress yesterday. He's going to continue his testimony tomorrow, so we could get a little bit more spooked. But it was just kind of, he basically didn't really say anything that we haven't heard yet. Basically, he's saying that the economy is growing more rapidly than what we saw in December. During their last meeting, things have picked up. Wage inflation, everything else has picked up. So there is a good chance that we could have 4 rate hikes. So he kind of reiterated that yes, there could be 4 rate hikes this year compared to the initial thought of 3. So that of course spooked the markets because with inflation here, so the yields went up as a result as well. So here's the bond market. As you see, we went down. We were way down, but we luckily were able to rebound a little bit and close off of our lows, a little bit higher off of our lows. Today we're up against the which was the resistance here, which we were fortunate to get above it, and then fell below it. And now we're trying to work our way above it again. We're currently about 11 basis points higher from where we left off yesterday. So here's where we left off yesterday to here's by 11 basis points. Not quite enough to have an improvement in our pricing in interest rates. So rates are about similar to where we left off yesterday here. Now, if they did the price we were for the worst yesterday, way down here, then you could probably say it's mixed. So there might be some improvement in that pricing depending on when the investors came out with it. But again, for overall, if you factor from here to here, they haven't made any changes in the pricing. All right, so here's the 10-year yield. We dipped below that. We tested yesterday the yields. As you saw, we went up about almost 2.91. It was like 2.098 or 908 or something like that. So right at that line here, we kind of set that line. Today we're down a little bit. We're down to about 2.88 right now, which is good for us. It helps keep us above here because if it breaks above this resistance level, which has been hard for it to break above, and it did for a couple of days. The next one up is about 3%, which could translate to quite a bit of a spike in interest rates again. All right, so that pretty much wraps things up. Rates are about the same as where we left off yesterday. And if you guys want to get more updates, just come over to Twitter. I do post throughout the day on Twitter underneath my account, Mike Bjork. You guys have a great rest of the day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.